Well, I think the Chinese companies are catching up very fast. I think that's the point. I would say that we haven't lost our leadership here. The DeepSeek R1 model is basically comparable in capabilities to the OpenAI O1 model, which came out about 4 months ago. So they are kind of hot on our heels here, and I think we basically have somewhere between a 3 and 6 month lead on them, but they are catching up very, very fast. And I think President Trump is entirely right to be concerned that they are catching up, and we want to do everything we can to maintain our AI leadership and dominance.
David Sachs has been given a clear directive: secure America's digital future, both in artificial intelligence and cryptocurrency. The former PayPal executive and now Trump's AI and crypto czar stands at the helm of an ambitious initiative, one that aims to bolster U.S. leadership in emerging technologies while ensuring that the nation's financial ecosystem isn't left behind. But this isn't just about staying ahead of China. It's about reimagining the role of digital assets in America's financial future, and that begins with a bold new plan: a Bitcoin reserve.
President Trump's crypto czar, David Sachs, held a news conference earlier today laying out his plans for digital asset regulation and stablecoins. He also mentioned his team is looking into the feasibility of a Bitcoin reserve.
A Bitcoin reserve would be a seismic shift in U.S. financial strategy. Historically, gold reserves have backed national currencies, but in an age of decentralization and digital assets, could Bitcoin play a similar role? Sachs, when pressed on the details, remained measured but acknowledged that the feasibility of such a move was one of the administration's top priorities. Unlike prior administrations, which took a largely antagonistic stance toward cryptocurrency, Trump's government appears ready to integrate it into the financial mainstream.
The president said in his executive order in the first week that it's the policy of his administration to support the responsible growth and use of digital assets, blockchain technology, and related technologies across all sectors of the economy.
Clarity has long been the missing ingredient in crypto regulation, and Sachs knows it. His focus isn't just on Bitcoin as an asset, but on the larger crypto ecosystem, including stablecoins, which have the potential to revolutionize global finance. By creating legislation that encourages onshore innovation rather than pushing companies abroad, Sachs aims to make the U.S. the epicenter of the digital financial revolution. The recent push for stablecoin regulation is part of that larger vision.
Stablecoins really have the potential to ensure American dollar dominance internationally, to increase the usage of the U.S. dollar digitally as the world's reserve currency, and in the process create potentially trillions of dollars of demand for U.S. treasuries, which could lower long-term interest rates.
Stablecoins are not just a digital novelty. They represent an opportunity to extend U.S. dollar dominance into the digital world, securing its place as the global reserve currency. Sachs and his team understand that allowing crypto innovation to thrive within regulated frameworks will prevent the mistakes of the past, such as the collapse of offshore entities like FTX, and position America as a leader in the future of finance. Yet, despite the ambitious rhetoric, concerns remain. Is the administration truly committed to Bitcoin as a national reserve asset, or is it merely posturing to appeal to a crypto-friendly electorate? When pressed on the matter, Sachs admitted that the Bitcoin reserve was still under review.
One of the things that the president instructed us to do was to evaluate the idea for a Bitcoin reserve. And so that is one of the things, that's one of the first things we're going to look at as part of the internal working group in the administration. So as soon as we get all that set up, we're still waiting for some cabinet secretaries who are on the working group to get confirmed. So we're still in the very early stages of this. But that's one of the first things we're going to look at is the feasibility of a Bitcoin reserve. I think the concept of the sovereign wealth fund is a little separate.
Beyond Bitcoin and stablecoins, Sachs also emphasized a broader push for financial innovation. He noted that Silicon Valley has thrown significant support behind Trump's administration, hoping for a more business-friendly regulatory landscape. Unlike previous administrations that stifled crypto businesses with unclear and often hostile policies, this new approach seeks to establish a collaborative framework between regulators and industry leaders.
At this point, I don't know anyone who doesn't support President Trump's agenda and administration in Silicon Valley. And so I think it's actually been terrific to be able to involve a whole lot of new people in government from the technology industry. And I think it's going to bring a lot of innovation to Washington, which is sorely needed.
The fusion of Silicon Valley with Washington's policymaking machine has always been a point of contention. Critics argue that billionaires and tech moguls should not be the ones writing the rules for the industry in which they have financial stakes. But to Sachs, these are the very people who understand the technology and can push America ahead in this rapidly evolving space. The idea of government-backed digital assets may seem paradoxical in a movement built on decentralization, but Sachs and his team believe that strategic involvement is necessary to maintain U.S. economic leadership.
Financial assets are destined to become digital, just like every analog industry has become digital, and we want that value creation to happen in the United States rather than giving it away to other countries. This will also, I should add, be much better for consumer protection because it's easier for regulators to supervise an activity when it's onshore.
Sachs envisions a financial future where digital assets are an integral part of the American economy. Instead of allowing this technology to flourish in offshore markets where regulatory oversight is minimal, his team wants to ensure that the U.S. remains the central hub for innovation. Consumer protection is a key part of this equation. By keeping these markets within American jurisdiction, regulators can differentiate between legitimate businesses and fraudulent schemes. The collapse of companies like FTX, which was headquartered in the Bahamas, is a cautionary tale of what happens when regulation is absent or inconsistent. But the debate remains. Can crypto truly thrive under government oversight? Can innovation coexist with regulation? And perhaps the biggest question, does integrating digital assets into national policy strengthen America's financial position, or does it tether an inherently decentralized movement to traditional institutions?
But I think the idea that technological innovation should remain in America is one that we, as Americans, hold a lot of pride in. I don't think when Donald Trump says Bitcoin should be made in America, probably missing the point a little bit. But I do think the idea that crypto innovation as a key part of our technological infrastructure, key way that we can think about reimagining the financial system, the cultural system, the way that IP works, all that stuff to me is very important.
What do you think? Should the U.S. take the lead in digital assets, or does government involvement contradict the very principles of cryptocurrency? Let us know in the comments.